Good evening. A very warm welcome to this edition of Business at 9. I'm Vikram Oza with the big buzzing business news of the day. And right on top, we're tackling what's happening in the markets because for the last 38 sessions, we've been talking about FIIs and their outflows. Now it turns out that FIIs are net buyers. So after 38 straight sessions of selling, why are we seeing this reversal? They bought shares worth 9.9 thousand crores. Also, the reversal is half complete when I tell you the story because see what's happening with DIIs. They've turned net sellers, and the kind of selling we've seen is worth 6.9 thousand crore rupees of shares. Let's get expertise on this. Sunil Subramaniam is joining us as market expert on this discussion. Great to have you with us always, Sunil. Help us understand what's happening. What has triggered this reversal in FII flows? Is it purely a result of global factors? There are domestic cues that are like stabilizing inflation or growth prospects driving the shift. Why are we seeing this role reversal, as it were?
I think there are two or three reasons for this, Vikram. The most proximate reason is, of course, the winning of the Maharashtra election, which coming on the back of the Haryana election. I think that the longer-term FII money, which is betting on India's growth story, right? So they need policy continuity, and I think the Lok Sabha result had kind of put a slight dent on it in terms of would the BJP be able to confidently survive this 5 years? Would they be able to win the next election in 2029? So a little bit of uncertainty was there around that, and the Haryana election gave the first trigger that the BJP will figure out the mistakes that happened during election campaign and correct that. And I think Maharashtra was a resounding reaffirmation. So I think the continuity of policy, and I hazard to say that they are now saying that 2029 they can be confident that the BJP will come back to power. I know it's a very long shot. We're talking about 5 years from now. But I'm saying the way the government has acted to those states where they lost ground, and you have Bihar and UP coming up as assembly elections soon. So from that point of view, I think that the long-term FII, I think who are waiting on the sidelines or waiting for a cue have got a positive cue. That's the most proximate reason. The second I would say was actually the Adani factor. Why do I say this? Because the Adani related correction on Thursday, right, was of course hitting the Adani group very badly, but it hit a lot of other segments of the market too. The market itself was down. So what it meant is that a lot of the froth which was there in the Indian market, right, could have got taken away on that day. So that's why you see from Friday onwards, the market has bounced back, and today they have actually turned net buyers. So my sense is that even from Friday, they've started slowly buying in because those valuations are not as unreasonable as they were before. Yes, there could be a couple of more quarters of maybe downgrade, everything happening, but these are longer term FIIs who are taking a slightly longer picture. That is the second aspect. The third aspect is that increasingly news is coming about China. You know, there was this whole China trade because China was talking about, stimulus and all of that, which turned out to be a false dawn. But now with Trump really strengthening his team, going public with the kind of people he is going to put in key positions, it's clear that there's going to be a heavy hit on China on the tariff part. And so reading into that, there is a Chinese slowdown. So the whole recovery of the Chinese market, which was a story a couple of months ago, is today not looking that attractive. And so some reallocation. And you have seen some brokerage houses like CLSA and others change their view on China and have now started favoring India. So increasingly, these big international brokers are turning positive towards India. And while they say short term, they might still see a volatile market and may go sideways. By the end of next year, all of them are predicting new highs for the Nifty. So I think all these three factors put together. And if you look at it, from the China factor, there is a positive India factor which you can glean. Why do I say? If Trump is going to put tariffs on China and Chinese products are going to become more expensive, they still, until US manufacturing really picks up and substitutes it, they have to go to another country to buy. Otherwise, US inflation is going to go through the roof if everything product is going to be made in America. So then the advantage for India from its own PLI manufacturing thing, there's a boost which they can expect. And on top of all of this is, if you notice in the market today, is the bounce back of the PSE sector. Why? Because the PSE stocks have went through a major correction because there was a liquidity driven rally earlier, there was a value rally earlier, because they were all at a discount to the private sector counterparts. And then there was a correction when the FIIs start selling. There was a correction there that was happening. But if you see now, with the government's strength in the Maharashtra and Haryana elections,
Yeah.
the PSE sector
Yes.
to get a boost from the government is probably another story that's getting played. So
Right.
you will now see that allocation slowly, that the correction that happened in the PSE, starting with the PSU banks, of course, and on a big way. I think it's a start of a process where that comes. And if I
Yes.
may add the point on domestic DIs being sellers,
Yes.
I think it's just rotation.
Okay, you think that's
Right.
rotation, but now on the key point of FIIs now turning net buyers, and that's after 38 sessions. Is that sustainable? Because you said that these are long-term players within the FIIs as well. But could there be a trend reversal now if the US Fed, for one, signals a hawkish stance again?
See, I think that the short-term hedge funds and all of those would still be a little bit iffy about India. I think this moves entirely a longer-term policy-based, growth-oriented funds, which is sovereign wealth funds, pension funds, insurance funds, which is making this move. I think the short-term people who are playing are still favoring the dollar, and they're still favoring the US stock market and the US debt market compared to the emerging market. So I think till the month of December, you will see this volatility. And second thing is, hedge funds need to book profits to pay bonuses to their fund managers. So that's a story which will still play out till middle of December. So I don't expect the short-term money to really turn positive. So as a trend, that would happen in January, in my perception.
But what about the kind of sectors that FIIs will favor now? Are they going to do some amount of cherry picking, or do you think it's going to be a broad-based shift that we'd see of FIIs and this across the board in our equities?
So the first is that they will do cherry picking because FIs are coming from a what do you call low risk American, Japanese, European market to a high risk emerging market, and so they generally don't buy everything. They buy cherry pick. And so where will they cherry pick? I think banking index, because the banking sector hasn't delivered the kind of returns that Nifty has delivered over the last 1 year, right? So I think the banking sector, if you're going to favor India manufacturing and growth, banking sector is going to take key part. And so corporate banks, for example, and all of those would be among the top picks that a FII would look at. Number one. Number two, I still feel IT will be a strong pick for them because the US economic story is rebounding. US corporate America is going to do well. And if corporate America does well, then IT is one of the major spends that they will put on the anvil. And so IT companies, because they service US companies and they have a good comfort on the US pack, so they can counter check the IT companies' orders, they can talk to the US company because they are investing in those stocks. So IT will continue to remain a strong comfort zone for FIIs. So expect that to be another pick. The third would be overall manufacturing, which is where the PSE sector also will come in a little bit, because manufacturing is where I see that the Trump administration, so FIIs, when they look at it and what the Trump administration is going to do, is that if they're going to tariff China and move away, and they're going to give that business to India, Trump will want his pound of flesh. So there will be a kind of buying by India on the defense space and others from the US companies, which will be translated in terms of their companies coming and setting up JVs in India with the PSE. So I see that story, the manufacturing story, also something that the FIIs will increasingly invest in.
Yeah. But with the dollar strength now softening slightly, the currency play is going to affect FII flows into Indian assets. But also this FII trend could influence retail investor strategy as well, especially in an environment where we are seeing DIIs who've been the dominant players recently. So how is that likely to influence the ebb and flow in our markets? Are we seeing a near-term rally taking place, or you think there is going to be volatility before things settle and we see that kind of up move?
There will be volatility because when FIIs come to buy, a DII has to sell. So what will the DII sell? The DII will do a sector rotation. So there will be volatility because the DIIs, to the extent that FIIs need to buy, they will wait for the price to rise and then they will sell those stocks and then redeploy them. So because of the sector rotation happening, we will see that the market will be probably sideways movement. So there will be continuous buying and selling from both sides, and I expect a fairly volatile. I don't expect a deep correction, obviously, because there's strong buying support from DIIs. So even if prices turn negative also, I expect a volatile market for a month, but with a uptrend which is rising, which would finally translate in January. So I would say just the month of December up to middle of December, there would be continued volatility in the market. But from January, I'm strongly expecting a double engine buying, which is FIIs plus FIS, both buying stocks.
So not quite a Santa rally, but perhaps one in the new year is something that you're expecting.
Yes.
So it's always a pleasure having you and your perspective on Business at 9. Thank you so much for joining us tonight as well.
Thank you. Thanks, Vikram. Take care.
Let's tell you what happened in the markets today.